Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. So right now, gold and silver are in the green, but by not too much. There's a lot of volatility, a lot of fluctuating prices. Is bouncing back and forth between this $14.60 range to $14.30 range. It's just up and down. We see gold at $1,645, up $2.99. Silver at $14.69. Are we going to make a breakthrough? I found an article from Seeking Alpha talking about how silver is on sale, how it can change our perspectives, how it can adjust our perspective to look at the markets as more opportunity than to look at them as failing. Because when silver's cheap or when silver's low, it just means that the prices are cheaper, that you can get silver for a discount. Now, I know it's harder to buy silver right now for these discounts because the premiums are so high, but I know you can go to your local coin shop and there's other alternatives online where you still can find some pretty decent prices. So with that said, make sure to smash the like button. Make sure you subscribe if you're new, because I do post daily videos. So silver is far more volatile than gold. 2008 is a guide for the silver market. Open interest provides a clue, and gold should move a lot higher and silver should follow. So anyone who has spent decades watching the price action in the silver market knows that precious metals, gold's little brother that loves both to overreact and underreact with market conditions. So silver is gold's little brother, basically. So silver can sit in almost comatose range for long periods. When it decides to move, watch out, because the percentage declines or rallies are often shocking. See, silver hits higher highs and lower lows compared to gold. If gold's going up 10%, silver's going to jump up 17, 18%. If gold's going to drop 20%, silver might drop 30%. So it goes to the extremes that gold does. That's also why there's more opportunity in silver than gold. So silver refused to follow gold on the upside during the second half of 2019 and early 2020. Silver did rally, but could not move to a level that established a technical breakout like the yellow metal. When the Fed told markets that interest rates would fall in June 2019, gold broke out of the $331 trading range that had been in place since 2014. Gold moved above its July 2016 high of $1,377 and never looked back at that level. Silver's peak in July 2016 was at $21. We know that July 2016 high of $21 is something that we've really had a hard time going past or passing. And the stubborn metal only made a peak of $19.54 in 2019. As of March 24th, the 2020 high was below that level. So while silver moved higher with gold, it failed to make technical statements. When risk-off hit the precious metal back in the coronavirus, silver's price action was shocking as it fell to its lowest price since 2009, and that's when we saw those $11 silver prices. So it's showing that silver is more volatile than gold. Over the past 4.5 decades, silver's been far more volatile than gold. The quarterly chart shows gold shows the historical volatility that's been in a range from 4.56% to 42% since 1974 and was sitting at 10% on March 24th. So you can definitely see that there is a lot of volatility. So another thing that I like these markets do and these charts do is they can show patterns, the historical patterns of what's happened before, and apply it to the markets happening nowadays to see where prices might go. And this is the 2008 the credit crash, or the financial crash of 2008. It's a great example to look at where prices could be headed, because we know that was the start of $50 silver in 2011. So the monthly chart shows that 2008 global financial crisis caused the price of silver to decline from a high of $21 in March 2008 to a low of $8.40 per ounce in December of the same year, a drop of over 60%. The most recent fall from $19.54 to September 2019 to $11.74 in March 2020 took the price of silver 40% lower. Time will tell if the violent sell-off in silver took the price from $18.92 in late February to the $11.74 mark low in mid-March. Establishing a bottom of silver has to work hard on the downside ahead. So will we be seeing this, this $50 silver rise? Because you can see right here, this is where the bottom was, and then you see this huge gradual increase. Now, hopefully, if it does get to this point, you see right here this huge green line and this huge red line. That's what we don't want. We want it to gradually appreciate, because if it just explodes like that, then there's a huge chance that silver is going to crash, and that's exactly what happened, and it crashed just as much. So we want it to gradually appreciate, but we see the bottoms right here, and this is where we could see higher prices heading forwards, especially since things are much more extreme than they were back then. So gold should go a lot higher and silver should follow. Gold market also corrected, but the decline was far less than silver's nearly 40% drop, and that's from silver's high volatility again. The daily chart of the nearby April gold futures on the COMEX shows that risk-off conditions took the price of the yellow metal from a new high of $1,700 on March 9th to a low of $1,450 on March 16th, or 14.9%. Gold exploded higher from the low, reaching a high of just below $1,700 on March 25th and was trading at $1,628 on March 27th, a rally of 12.3% above the recent low. At the same time, May silver futures were trading at $14.56 an ounce on March 27th, at 24% above the low from March 18th on the continuous contract. So, it's definitely looking like things could be on the upside. So, silver was on sale at below $12. It definitely was. That's a steal. If you think about what silver's real value is, that's a steal. Expect lots of volatility in the market over the coming days and the weeks. In 2008, gold and silver fell to lows of $681 and $8.40 respectively. In 2011, the treatment for the global financial crisis lifted prices to $1,920 and $49.82. In 2020, the treatment for the coronavirus is unprecedented when it comes to the tidal wave of liquidity. Gold and silver are the oldest forms of currency in the world, and the countries cannot increase supplies without extracting the metals from the crust of the earth. I expect that the price action in gold and silver will be explosive in the coming months and years, which I definitely agree with. So gold historical volatility, which equals historical opportunity, or historic volatility is historic opportunity. Financial markets may be discounting the worst case scenario. The ES market is making a low of 2174 on March 22nd, reverse from there. For those who are in shock, particularly in relation to gold mining shares, which collapsed 50 to 60%, try to step back and view this as a tremendous buying opportunity. And that's what I always try to say. Please do not panic. Use common sense. Protect your family. Look for opportunities that are going to be presented. And that's also true. You don't want to be making these irrational decisions, these very silly decisions, and it's easy to happen because there's so much emotional attachment in the market. So you have to be careful. So the government is trying to restore confidence in the markets, but they have extremely difficult chores. The coronavirus is the global economic reaction to it led the economic collapse. Early government intervention in the markets had little to no effect. News of the late U.S. $2 trillion foray attempt to restore confidence appeared to have brief effect as stock indices raced up, but it appears to have been short-term effect. We believe precious metals are massively undervalued and putting in a bottom. Incredibly low price metals offer an excellent buying opportunity at these levels. If you could jump in the future and look right now, let's look at the 1 year. If you could look right now, you would say this is where you would want to be buying and this is where you would want to be selling, right? Well, most people sell at these levels and they buy, or most people buy at these levels and they sell at these levels. And that's because right here, when the prices are higher, that's when everyone's talking about it. That's when friends or family or YouTube videos are being made. That's when everyone's talking about it. So if you can learn to buy low and sell high, that's where the real money is. So the market traded below the average price of $1,627. We have been building, which appears to be some kind of resistance as we approach the $1,649 level, which is the average price for today. And right now, gold's sitting at $1,645, so it's still extremely close to that level. So the average price is a 50-50 standard deviation, so the market could go up or down from here. Therefore, it's not a good place to enter the market. You want to enter the market buy one or sell two levels, and which have 90% to 95% probabilities of reversion from the mean from those levels. So right now might not be the best time to get into gold, as prices could either go a lot higher or a lot lower. It's a 50-50 chance, which is not a very good, ratio to go off of. But, this is, I'm going to go down here because this is really important. So it starts off to say, please do not panic. Use common sense, protect your family, look for opportunities that are going to be presented. One of the things that made me feel very optimistic during the change in the paradigm is that also showing a light at the end of the tunnel. These numbers are deep depression numbers compared to the 1929 crash. One thing that's going to make a difference, which we did not have in 1929, is modern communications, which you have virtual economy in a way. It's going to change the dynamics of moving forward. This might be a shift that will transition us from old to new way of doing things, forcing us to embrace technology to its ultimate extremes in research and analysis and how we work. Technology is going to provide us with safety net that we did not have in the 1930s. It's going to create new business. Schools are going to change and embrace virtual education, and so the way socializing may be changing. It's time for society to embrace the future, and we have no choice. So when a crisis like this hits, like a black swan, it reveals its weakness in the system. A lot of traders were highly leveraged and they were hammered by the crisis. Leverage can be your friend or an enemy. You need to be aware if you're trading futures, your leverage entails beyond your initial deposits. So the volatility in the markets in general has expanded exponentially. The assumptions you had before trading and managing your risk no longer apply. You have to reevaluate your risk and money management, especially if you're a large trader and doing it in volume. 10 contracts is like trading 100 contracts before, so you must calibrate or recalibrate. So it's just sharing, the risks that are involved right now if you are going to be trading, which I just recommend buying physical gold and silver. If you're in the ETS, marginal trading, or any of that stuff, just be extremely careful. It is a lot scarier because things are a lot more extreme to this extent. So anyways, I'm going to wrap this video up here. I just want to share this stuff with you that I found. I'll probably make a couple more videos today. So make sure you smash the like button. Make sure you subscribe if you're new, or even if you haven't subscribed yet, because I do post daily videos. Anyways, thanks for tuning in. This was Silver Slayer. I'll see you guys soon. Peace.